Today I'm doing the video on silver and silver miners, and is it a good time to buy the silver miners or not? But before we do that, I'd like to just dispel a rumor which has been circulating on the net. And the rumor was that JP Morgan had sold all of its, it had closed all of its short positions at the lowest price of the day, which is $78.29. That rumor appears to have originated with what you're looking at on the screen at the moment, which is a report from COMEX. It's a regular COMEX report showing the deliveries of silver which are taking place, and this kind of report gets published every day. Unfortunately, I think a lot of people have got the wrong end of the stick. This particular image, which is one circulating widely, shows that JP Morgan took delivery of the silver underlying 633 contracts of the February maturity futures. Now, they could have been doing that on behalf of themselves, or they could have been doing it on behalf of one of their clients. But what it does not show is that they closed their short positions, if they had any at all. I counted my silver coins, and I seem to have just the same number as I had before the crash. So I don't think I've lost any money there. I've got, perhaps I had 10 before and I got 10 afterwards. They're still there. Now, if silver and gold had not rallied so strongly in the last 10 to 15 days, you wouldn't have even noticed today's prices being unusual. It's only unusual because we had that huge spike up that you see on the chart here. There we go. It suddenly it was fairly flat, and then it started accelerating way up, going faster and faster with bigger and bigger jumps. If it hadn't been for those last few days of jumps, you wouldn't have noticed today's prices being anything unusual. We'd be all getting excited. Wow, silver's 84. It's well above the $50 barrier, and it's not ever getting back to 50. We'd be excited. We're looking at what happened here. Silver price fell by 26.44%, or $30.52. to a price of $84.92, which you can see this blue line going across here. And down below, I've got the chart. This chart at the bottom is the chart of the the Global X silver miners, the big silver mining companies. So the silver price fell today, or Friday rather, to $84.92. So the last time it was there was about 14 working days ago, about 18 actual days ago, on the 12th of January. And on the 12th of January, it closed at the same price as it closed today. So this is the lowest price, if you like, for 15 or 16 days of silver. Now, the question is, I'm going to answer the question, what happens to the silver miners? Should you buy them? I keep asking that question. Well, what I can tell you is that every silver miner, which is digging out of the ground and selling its silver, should be reporting much higher profits than it did for the previous 3 months. Because if we go back here, look at the silver price, and I'll just bring that into range here. Now, I'm going back to the quarter which ended, reported quarter which ended, was the quarter ended from June to September, and the silver price was around $34 and by September it was just touching $40. So between $34 and $40, let's call it $37, $36, that was the price at which they were selling their silver in the last reported quarter. The next reported quarter will be till December, and the average price in the quarter of December will be somewhere between $40 and $56. So let's call it $48. So the average selling price will have gone from $38 to $46. And now what about the next quarter, which is going to be March? Well, we don't know what the average price in March is going to be, but I'm betting that based on what we now know, it's going to be higher than $48. So when we get the year-end results to the 31st of December 2025, which will be announced probably for many companies in mid-February, they're likely to show the last quarter with much higher profits. And when we get the first quarter profits for 2026, which will come out in April, May, June for some, they will show much, much higher profits than they showed in December. So what's going to happen on Monday? Well, for sure, it's going to be an extremely volatile day. We're going to see large swings up and down, and perhaps in the opposite order, but there will be very big swings, and anybody who's trying to trade it will risk getting caught at the wrong end. Your emotions are going to run wild. The prices start to climb. People will be chasing it up and chasing it up and chasing it up. Then it'll turn on a sixpence and go all the way down, and people will chasing it down. The stop losses will be being triggered. Then it'll go back up again. It's going to be a yo-yo day. I don't know which order it'll be, and the price will not finish, I think, where we finished on Friday. On Friday, many people unwillingly ended up with cash due to their stop losses. So now they're sitting on cash, wondering what they should do, because they're actually holding an asset which is going to go down in value because the governments are increasing the levels of debt and will continue to increase the levels of debt so long as they run budget deficits. And that basically means governments get poorer, someone else gets richer, and that someone else is going to buy things with it, which might include silver. So if you've gone into cash, you need to think about whether you want to stay in cash or whether you want to find your way back in. But to be honest with you, it's a dangerous day to do it on Monday. What about me? Am I selling or buying? No, I'm not doing anything, and I'm not planning to do anything, and I didn't do anything in the crash, and I didn't forecast it. Of course, every bull market is a wall of worry, so inevitably, along the way, we'll always get large dip. The purple line going down here, we can see that the the Global X Silver Miners, symbol is SIL, closed today at Friday, $94.30. There we are, $94.30, down 14.78%. And last time the silver price was where it is today, 16 days ago, it also closed at $94.30. So my conclusion is that if the price was right 16 days ago, the price is right today. It's neither too high nor too low. But the question is, should you be buying silver miners, not whether it's too high or too low, but certainly compared with those two dates, 16 days ago when the silver price was where it is now, and today, we've found that the SIL, the ETF of the silver miners, is also in exactly the same price. Most likely, this is simply a delivery of silver on behalf of one of their clients who said, I want to take delivery, perhaps I'm a manufacturer, I need the silver for my manufacturing process. But even if it was JP Morgan who were closing their short position by, it's not really closing a short position. What we see is they're taking delivery of silver, which means they were long here, so they're not closing a short position. But even if it was a closing of a short position, 633 contracts is about $250 million. That's a drop in the ocean compared with their 54 billion annual profit. It's neither here nor there. And in any case, even if they were in some way, shape or form closing their short position, what we're looking at is delivery of contracts under the February contract, delivery of silver under the February futures contract. What about March or April or May or June and so on? It doesn't really tell us anything at all. So I don't know why people have misinterpreted this, but they've got it the wrong end. But in America, it finished at $94.20 exactly. That's that blue line across here. If you follow the blue line across the screen, that's $94.20. And the gold price up here on the green line up here finished at 4,893. So the last time the gold price was at this level was 6 days ago, here, where this light blue circle is. Look at the light blue circle there, 4,893. So what was the price of the GDX on the day that gold was at the same price as it is today last time? Well, if I scroll down the pink line or the purple line, you can see the last time we were at the same price, the GDX was at 105.17. So last time gold was at this level, the GDX was $105.17. Today, it's $94.20, which means that if the gold miners index were to return to the value that it was last time the gold price was the same as today, it would have to rise 11.60% from $94.20 to this price here of 105.17 cents. Will that happen on Monday? Well, maybe, maybe not. We could take the view that it will follow what the futures price did. So the futures are at 4745, which is about here. If I move my cursor across there, it's obviously on this green spot, this green candle here. And I follow that down, and I'll see that the GDX on that date was priced at $102.78, $102.78, still well above the present price of $94.20. So just saying that if the gold price were to stabilize, and it will not, I can guarantee that, but if the gold price were to stabilize at the closing price of Friday, it would be reasonable to expect the GDX to be at the same price as it was last time the gold price was at this level, i.e. some 11.6% higher. It was the announcement by President Trump of his appointment of Kevin Warsh as the new chairman of the Federal Reserve. Kevin Warsh will take the place of Jerome Powell at the in May. So that's when Jerome Powell steps down as the chairman. Now, we don't know yet whether Jerome Powell will continue as a governor on the board of the Federal Reserve or not. He can do so, but he himself has said he's not going to comment on that at the moment. So we don't know whether he'll be continuing or not. Now, on Friday, many people unwillingly ended up with cash due to what's called stop losses. So as the price rose, many people had bought into the market, or if they already owned gold, they put what's called a stop loss. And a stop loss is something which is designed to prevent you losing more money than you wanted to lose. So as the price rises, like 4,800, they put a stop loss at 4,700, 4,900, they raise the stop loss to 4,800, 5,000, they raise the stop loss to 4,900, and they keep the stop loss tight, hoping that the price continues in the same direction. But if it turns around, the stop loss will take them out at slightly below the latest price. At least so they hope. But the important thing to know about a stop loss is you don't get the price of your stop loss, you get the next trade after your stop loss has been hit. Now, normally that means you get either the stop loss or extremely close to the stop loss, but in a very fast moving market, you might have a stop loss at, let's say, 4,900 and find you've been hit at 4,870 because it could move extremely fast. So that's why I never touch stop losses. But the reason the market went down so fast, we had big institutions who've got a lot of money and firepower, and they actually can see everybody's stop loss. And what they could see was layer after layer of stop losses all the way down. And they knew if they hit the market with some sell orders, they would trigger those stop losses. And every stop loss which is triggered pushes the price lower, triggering the next stop loss, which pushes the price lower, triggering the next stop loss, which pushes the price lower, triggering the next one, and so on. So what we had was a cascading series of liquidations, forced sellers. If we follow the blue line here, the dark blue line, which is the closing price of the GDX, across the last time the GDX was at this level, we get to the weekend of 9th January to the 12th of January, and then we can follow up on the orange line, and we can see that gold, in theory, would still have to fall to about $4,550, perhaps, something like that, somewhere in the range of 4,500 and 4,550, which would be a little bit more down from the present price of 4,893.